Good morning, it's Harvey Jackson. Just going to go through some of the news items I'm paying attention to. Trump on and off again, tariff chatter, changed the market. We had our ag outlook forum numbers come through, which are statistical numbers, but a lot of it was expected as well. So Trump will impose tariffs, another 10% on China, and back to the March 4th date of the 25% tariffs on Canada and Mexico. Had the market kind of go through a spin here with a lot of changes from one day to the next. I don't know if he's can't pay attention to what he's saying because he's in front of the media. He's not actually ever reading off of a teleprompter or anything. So maybe he's losing track of where he is. But we'll see here. He's also meeting up with Zelensky today. He had met up with the French Macron on Wednesday, and then UK Prime Minister yesterday, and Zelensky, I think, today. So there's a lot of meeting with some of these countries because of his tariff. It definitely makes him feel important if he's got everybody coming to him begging not to put on tariffs. U.S. row crop. So you can see here, this is the yields that are kind of getting pointed out at is right here, and 94 on corn, 84 on soybeans, and 147 on wheat. So these are where some of the surprises are. Is this one, and the actual yield that they're saying is actually a bit of a lift as well, better than we've seen for yields. So, but of course, if you're following trend lines, you are going to move those numbers up. So. You can see what kind of carryout that might actually kind of play in. It's still manageable, but it's maybe a little bit of worry if some of these policies don't actually come into play, like the E15, that kind of stuff. Next few articles, I'm just talking about India, and I mentioned it yesterday. India temperatures, they're waiting for the forecast to come out, and it came out, and it looks like it's going to be a little bit hot and dry in March, and that has an impact on the winter crops like wheat, chickpeas, and rapeseed. So there's a little bit of worry there, and whether that's a story to keep following, because forecasting something that's 30 days ahead is not all that accurate either. So I can say in the next 30 to 4 years ahead, there's going to be a lot of uncertainty with Trump. That is for sure. India economic growth, it also came out yesterday. Besides the weather, their growth was a little bit better than last quarter, but that is still slightly down from where they expected by a tenth of a point. India and EU are committing to a year-end deadline for a free trade pact, and we're going to see a lot more of this actually happening as Trump's rhetoric keeps pushing the envelope of just only U.S. Trade is the only one that's important. You're going to start to see a lot more communication between the other trading partners outside of the U.S. and kind of leave them out. So. Not that it can all be replaced, but it will actually put a pretty good lean into it. That you kind of soften the blow. The trade will still end up happening. It just might not be with U.S. as the center point. China exchanges to expand commodity tradings for foreign investors. So they're making some changes, and we'll see if this kind of keeps on happening, because there's there changes with the Dalian. They're allowing some foreign investors to actually trade on their exchanges. So there's some back and forth, and we'll see if this actually will be a little bit more open system. But again, I think some of this is initiated by trade to make sure that we're trading with some of these others rather than just the U.S. I got a couple of articles just talking about Canada a little bit and trade as well. Canada's AAA ratings are safe, but the ones that are going to be impacted, and I'm in one of them, Ontario, Quebec, and Manitoba are the most vulnerable to tariffs because we count on it so much, because we don't have that crude oil as well. And yeah, Alberta projects a 5.2 billion deficit if Trump tariffs proceed. It speaks for itself, but it needs to be noted that you get one of the richest provinces starting to produce deficits. It's going to be a problem. Argentina's crop conditions, you can see, and this is what I'm paying attention more, is last week to this week, and shrinking the poor and very poor in both cases, and that's the one that I'm paying attention to the most. Well, let's just have a look at what the markets are doing. Canola is up, rapeseed is down, and your soybean oil is just basically flat. Palm oil is slightly up, and your wheats are just a couple pennies up. Canadian dollar is basically flat. So let's just drill into here. The canola, when the news came out that the soybean yields are going to be slightly higher, it actually moved the market down lower, of course, and also the tariffs are back on scenario. It puts some pressure on the market as well. So that was the minute chart. Here we are looking at the daily chart, and it was the day before that we had the big sell-off, and then basically consolidating, you know, uh, towards the bottom end of that range. And you can see that our slow stochastics are kind of just not oversold or anything like that, but just keep your eye on that one as well. Here's your new crop, and it's a steeper curve, but it's at the bottom end of the range. And your rapeseed, if we look at this, and Kyle had looked at this as priced in euro or US dollars, and it was actually making a higher high, but it's not in euros. So, but it's just with European rapeseed has actually had a pretty good run for sure. And you can see it here. We actually made it above that trend line, and if we can get above there, then it's favoring canola exports, and it's about the right time of year. And the ice on the lakes, Great Lakes, it's disappearing very fast. So maybe expect some traffic to happen there, and maybe I'll show that on Monday. Soybeans, we've had quite a few red days here, and then we're starting to get into that oversold kind of a position. It's not. I'm not using relative strength index. I'm using slow stochastics, and you can see that it stays in the bottom for quite some time as well. Now you got to remember that we're going to be right around the corner. That we're going to have a USDA report in let's call it 12 days. Palm oil, a little bit of a recovery, but not much to speak of there. Soybeans, that slide that we're talking about. If we look at it, when that report came out, it actually on the minute chart actually went steeply or quite fast down there. So, oh, that was the Canadian dollar. Oh, sorry. Here's your Canadian dollar in that move. So this is tariffs back on. This is tariffs off, on, and I would expect if the actual tariffs do come on, we could be reaching all the way down to that level there. Let's have a look at wheat. Lots of red, lots of pullback in quite a few days here. So if we look at it so what I have here is U.S. Canadian dollar, and on the same screen as the wheat. So you can see the same leg that we had in the wheat, and you see this chart move on the Canadian dollar going down. So that when the US dollar gains strength, it actually puts pressure on the market. So you can see that this pressure has actually put pressure in the same kind of timeline as on the wheat. And I've said this to a few clients that the commodity that gets affected the most is wheat when it comes to the US dollar, for the fact that it's traded worldwide, and it seems to actually have the biggest implications. And here's your new crop, and it's slide here too, red winter, and I did the exact same thing with red winter here too. Red winter's had a lot of red days, and we're pulled right back to 38 retracement values there. Corn, pretty good pullback right back to your 50-day moving average, and if we look at that move on the minute chart, it's quite substantial. And so these are the reports that are probably going to give us an idea what's going on. You get your March 11th, the USDA, and then March 12th, the StatsCan. And then probably the most important one for corn and soybeans, which gives us direction, is the March 31st prospective plantings. Expect some more market volatility over the weekend, as the tariffs are going to probably get talked about all weekend.